Welcome to The Deep Dive. We're here to cut through all that noise and bring you the critical insights from the sources you follow.
That's the plan.
Today, we're taking a really deep dive into the world of cryptocurrency. It's dynamic, sometimes exhilarating, let's be honest, often challenging.
Definitely challenging.
We're going to look at current market trends, dig into specific coin movements, and maybe most importantly, uncover some of those time-tested trading strategies.
And a mindset behind them.
Exactly. Our mission is to, equip you with the knowledge to navigate this space, turn that information overload into those aha moments. We're not just staring at charts today, we're also really getting into the mindset that separates successful traders. And we've got an incredible story later, the Bitcoin King, to illustrate that.
Yeah, looking forward to that one. So for this deep dive, we're drawing on a bunch of real-time market discussions, expert analyses. It's kind of like getting a front row seat as the conversation happens.
Right.
And the market is absolutely buzzing today. I mean, Bitcoin, Ethereum, Solana, they're all showing some pretty significant action.
Okay, let's kick off with a snapshot then. Where are we right now? It's September 10th, 2025.
Well, the overall feeling for Bitcoin, Ethereum, and Solana is pretty bullish. Actually, maybe even more bullish than some expected.
Which is always good to hear.
Absolutely. Yeah. And we just saw Ethereum have a strong breakout. It was consolidating for a bit. Now it's pushed through.
And Bitcoin itself, still hanging out at historical highs.
It is sitting at a historical high.
Yeah.
And that alone is major news.
Yeah.
Right? But the way it's climbing is maybe even more interesting.
How so?
Well, what's interesting, according to our sources, is the preference seems to be for this slow, steady climb, not a sudden, explosive pump.
More sustainable.
Exactly. That kind of measured growth is generally seen as healthier. And it's usually a better sign for the altcoin market, too.
Okay, and connecting that to the wider world, any external factors playing in?
Yeah, definitely. The U.S. stock market opened strong today, climbed about 0.5%. Historically, that often gives crypto a bit of a lift. Broad economic confidence often means more risk appetite.
Right, makes sense.
And conversely, when the U.S. dollar index falls, that also tends to correlate with crypto prices going up. People looking for alternatives, maybe.
This brings us to something our sources just keep hammering home. Bitcoin. It really is the ultimate indicator, isn't it? The wind vane for the whole crypto market.
Absolutely. Cannot overstate that. Bitcoin's movements, they don't just nudge altcoin prices. They dictate the whole mood, influence where the money flows, sometimes even signal broader economic confidence.
So understanding why Bitcoin moves like it does, that gives you a better playbook for everything else.
Precisely. If you master Bitcoin, trading the others becomes much, much easier.
So can you elaborate a bit? Why is it so foundational? Why does everything else kind of hinge on it?
Sure. Think of it like the sun in the crypto solar system. Everything else orbits it. Ethereum, sometimes called the second brother, or smaller projects, the third brother coins, they all fundamentally depend on Bitcoin's gravity, its performance.
Okay.
Its price action sets the tone, which, raises the obvious question for you. What levels should you actually be watching right now for Bitcoin?
Yeah, what are the key numbers?
Our analysis points to 113,000. That level seems critical.
113K. Got it.
If Bitcoin kind of wobbles below 113,000, you often see other cryptos struggle a bit. But if it holds above 113K, that creates a much better environment for altcoins to, potentially take off.
Right.
And even more specifically, that 112,800 mark, that was resistance about 15 days ago. Now it's crucial support. If Bitcoin stays above that consistently, the outlook is very bullish. We could be looking towards 115,000.
And these aren't just random numbers, are they? They represent battlegrounds.
Exactly. Key points where there's likely to be significant buying or selling pressure. Knowing them helps you anticipate.
Okay, so Bitcoin's setting the stage. Let's dive into some key altcoins. Ethereum first, the catch-up king. Solana's been hot lately, but our sources say ETH has serious catch-up potential. What's behind that?
Well, a couple of things. Ethereum recently filled its previous price gaps, specifically the one between 39.30 and 41.50.
Clearing the way?
Kind of, yeah. It removes that overhead resistance, potentially clearing the path for a substantial move up. And its recent performance shows that potential. Remember back on August 22nd, it had that impressive 15% surge after a key speech.
I do.
Now, after breaking out of that 4,200, 4,380 consolidation range we mentioned, the strong recommendation is basically hold on to your long positions if you have them.
And the key takeaway isn't just those specific numbers from August, right? It's the principle.
Exactly. Identify the breakout from consolidation, have a strategy before it happens, know your entry points, know your risk management. For instance, ideal entry points for new longs were seen around 436 437.
And stop losses.
Yeah,
Crucial.
absolutely crucial. For short-term trades, maybe a stop around 4310 was suggested. Longer-term holds, 4275 is seen as that critical line in the sand. If it breaks below that, the signal is, maybe time to exit and protect capital.
So if Ethereum stays above, let's say, 4,400, especially thinking about tonight, around 12:30 a.m., what does that signal for the near term? Maybe adding to positions.
If it holds above 4,400, yeah, you might consider adding a small position. But the optimal zone for heavier additions seems to be 4,600 or above.
4,600. Okay.
Our analysis suggests once 4,600 is breached, we could see a pretty rapid climb towards 5,000. Some experts are even talking about breaking historical highs, maybe heading towards 5,600.
Wow. Okay. And you mentioned liquidations earlier. How does that play into short-term trading?
Right. Understanding liquidation levels is useful. They're not just technical points. They show where lots of traders are vulnerable. Like a drop to, say, 3,494 could trigger a wave of forced selling from liquidated longs, potentially pushing the price down faster.
A cascade effect.
Exactly. But conversely, if it hits 4,600, that could liquidate a significant amount of short positions, about $21.69 million, according to one source. That forces short sellers to buy back, fueling a potential short squeeze and driving prices even higher. It shows you where the market's pain points are.
Got it. Very interesting dynamic. Okay, next up. Solana, the amplifier. Aptly named, it seems, because it tends to amplify Bitcoin's moves. What's the reason for that amplification?
Yeah, Solana is seen as one of the strongest mainstream cryptos right now.
Yeah.
And that amplification effect, partly it's because it had lower market liquidity compared to giants like Bitcoin or Ethereum.
Just smaller moves have a bigger impact.
Sort of, yeah. Allows for faster pumps, faster dumps too, potentially. Remember September 7th, Bitcoin went up about 1.3%, which is decent, but Solana surged almost 3 times that, nearly 4%.
Wow.
And it's had impressive gains overall at 10-11% in just 4 days recently. That trend was really helped by Bitcoin bouncing off a key 4-hour trend line back on September 7th around 4 a.m.
So the advice for Solana is similar to Ethereum. Hold longs.
Generally, yes. Hold long position seems to be the consensus from our sources. Again, disciplined entry and exit are key. Good entry points were noted around 220, 221, but hitting those precisely is always tough.
And stop losses for Solana.
For short-term trades, maybe around 218.5 to 219. For longer-term holds, 212 is seen as that crucial stop-loss level. Again, having that exit strategy planned before you enter is vital.
And looking ahead, the growth trajectory, where could Solana be headed?
The projection is somewhere in the 230 to 260 range, mid to long term. And there's potential to even break its old high of 290.
290, okay.
The zones around 221 and 234 are seen as key accumulation areas. That's where analysis suggests the big players might be stepping in, sort of absorbing chips or supply. Beyond 234, up towards 260, there seems to be less resistance, which could mean a smoother climb if it gets there.
Okay, we've covered the big guys. But the crypto world never stands still, does it? New projects popping up all the time. Our sources mentioned a new contender, BLAA, launching tonight.
That's right, BLIA. It's hitting the OKX exchange, sometimes called OE, at 10 p.m. tonight. Also expected to launch in Korea.
And what's the tech behind it? What makes it noteworthy, besides being new?
It's designed to enhance the Ethereum chain. Basically aims to speed up transactions and lower costs, which are, ongoing challenges for Ethereum.
A layer 2 solution or something similar?
Something in that vein, yeah.
Yeah.
Improving scalability and cost.
Yeah.
But being a new launch, you know what that means.
Volatility, high volatility.
Exactly. Anticipated to be highly volatile. So the recommendation is definitely start with a small position, if any, and have a very clear stop loss. Suggested level is 0.023.
Okay, 0.023 stop loss. And potential upside. Any predictions there?
Well, the analysis suggests a potential surge right at launch. Could hit 0.113, maybe even 0.4. It's a wide range, which tells you about the uncertainty.
Huge range.
Yeah. The hosts in our source material were talking about maybe taking quick profits around 0.3x if it pumps hard. If they got in around 0.27, that's a quick 50% gain. But again, high risk. Strict risk management is non-negotiable here.
Absolutely. That perfectly illustrates the gamble with new launches. Okay, we've covered the market, the big coins, a new one, but knowing the charts is only half the battle, maybe less than half.
Oh, definitely less.
Let's shift focus now to something our sources stress over and over. Mastering the trader's mindset. Why is this arguably more critical than any single price prediction?
Because, at the end of the day, the market is driven by human psychology. Fear and greed, mostly. Our experts really hammer this home. Long-term trend trading is seen as the only consistent path to profit in crypto,
Not the quick flips.
not the short-term swing trading. It seems exciting, right? Catching every little move, but it rarely leads to overall profit. The emotional toll is huge. Transaction costs add up. It's like trying to catch falling knives sometimes.
Yeah, I can relate to that feeling.
The sources emphasize patience. Chasing every pump often just means you're buying the top, buying someone else's exit strategy.
That makes sense. And talking about emotions, leverage, that's the big amplifier, isn't it?
Absolutely. It's a double-edged sword, amplifies gains, fantastic. But it dangerously amplifies emotion, fear, panic.
So what's the advice on using leverage effectively?
Use lighter leverage.
Yeah.
Maybe something like 50x instead of going crazy with 100x or more. It helps mitigate the emotional shock of volatility.
Can you give an example?
Sure. Let's say you have a $10,000 position. A 2.44% daily move, which isn't unusual, is only $244. Manageable, right? But with 100x leverage on that same initial capital, that same 2.44% move feels like a catastrophic loss. It triggers panic selling bad decisions.
Right.
So your emotional reaction is directly tied to your position size and leverage. Control your emotions by controlling your position size. Don't over leverage a small deposit trying to get rich quick. That usually just leads to blowing up your account and that depressing cycle of topping up.
Which brings us to maybe the most critical piece of discipline, the unwavering stop loss.
Paramount. Absolutely paramount.
And I have to jump in here with personal experience. Set that stop loss and do not move it, especially not lower when the trade's going against you. That's the classic mistake, right? Leads straight to liquidation.
It's the siren song of hope, isn't it? It'll come back.
Exactly. I remember holding Ethereum from $3,400 all the way down to $800. Painful lesson. Unwavering discipline, maybe strategic hedging if you really know what you're doing. That's survival. Not moving that stop loss out of fear or hope.
Wow. Yeah, that's a powerful real world example of exactly the kind of discipline needed. And it ties into another piece of wisdom one source mentioned from a trading friend. I only buy for a good price.
Simple but profound.
It is. It means patience, waiting for your optimal entry point, not chasing FOMO, that fear of missing out every time something moves up. Sometimes, honestly, the best trade is no trade at all. Just wait.
Which requires filtering out all the noise?
Constantly. The market's bombarded with news, FUD, fear, uncertainty, doubt, hype. You have to filter it and focus on the underlying health, the real direction of the market. Listen to the market itself, not necessarily the commentary around it.
Okay, shifting gears slightly to the bigger picture, the macro outlook. The regulatory environment seems to be undergoing a massive shift. What are our sources highlighting there?
It's huge. We're seeing stablecoins getting recognized under major regulatory frameworks. One source mentioned the U.S. Talent Act, likely referring to significant crypto regulation proposals.
Legitimacy creeping in.
Big time. And beyond stablecoins, major cryptos like Bitcoin and Ethereum are increasingly being talked about, even designated as national strategic reserves by some countries.
Wow, that's a game changer.
It really is. This institutional and legal recognition means serious capital, big money, can now enter the crypto market legitimately. That fundamentally changes the dynamics. Plus, you've got countries like China and Hong Kong issuing their own stablecoins.
So the old image of crypto needs updating.
Drastically. It's crucial to shed those outdated ideas of crypto just being for illicit stuff. It's rapidly evolving into a mainstream financial tool. Accepted, regulated, integrated.
So given this new paradigm, what are the predictions, even conservative ones?
Well, the experts we drew from are conservatively predicting Bitcoin hitting $150,000 by the end of the year.
150K.
Ethereum soaring to $7,000 or $8,000, and Solana potentially breaking its previous high of $290. These aren't small numbers, and they really underscore this shift from, fringe asset to something much more foundational.
It really puts the mindset discussion into perspective. To truly benefit from those potential moves, you need that long-term vision, that discipline we talked about.
Exactly, which brings us perfectly to that story you mentioned earlier.
Oh, right. The legend of the Bitcoin King, or Ellie, as he's known in some circles. This story is just mind-blowing. Someone turning maybe 5,000, 10,000 RMB, that's like, under $1,500 USD, into 170 million USD.
170 million USD in 18 months.
With only 10 trades, and apparently 3 of those were losses.
Incredible, isn't it? But the key takeaway isn't just the insane profit figure. It's how he did it. The strategic pauses. He took a 2-month break from trading entirely at one point.
Wow. Discipline again.
Extreme discipline and a rigorous focus on only high conviction trades. He wasn't chasing every little wiggle. He waited for the big setups.
And there was that interesting detail about his least profitable trade.
Yeah, fascinating. It was during a period when Bitcoin itself went up 6 times, a 6x move in Bitcoin. But his own funds only grew 1.5 times during that period.
So just holding wasn't the magic bullet, even during a huge rally.
Exactly. It shows that simply HO dealing isn't always optimal if you don't have a refined strategic approach. You can underperform even a massive bull run without active, informed management. It highlights the value of strategy over just passive belief.
And his early success, something about a rollover strategy.
Yeah, apparently he used that early on, basically rapidly compounding gains from a small starting capital by rolling profits from one high conviction trade into the next. High risk, requires precision, but it built his base.
So this whole deep dive today, analyzing the market, the coins, the mindset, it's really about trying to embody that kind of disciplined, long-term, strategically informed approach.
That's the goal. Understanding the market mechanics and the psychology needed to navigate them.
We've covered a lot. The immediate market pulse, Bitcoin's crucial role, the potential in Ethereum and Solana, even a glance at a new player like BLIA. But really, beyond the charts, beyond the numbers, that Bitcoin King story, it drives home the truth, doesn't it? Success here seems less about frantically chasing every peak and valley.
And much more about patience, discipline, understanding those big macro forces that are reshaping the entire landscape.
So, if Bitcoin is the compass, as we said, guiding the market, and maybe Ethereum is becoming the engine driving innovation forward, the question for you, the listener, is, what role will you play in this rapidly evolving financial world?
Yeah, and tying back to that trader's wisdom, what good price are you genuinely waiting for? And maybe more importantly, what discipline will you cultivate to actually seize it when that opportunity finally arrives?
It's something to really think about. We encourage you. Reevaluate your strategies, look at the big picture, and remember, sometimes the smartest, most powerful move you can make is just to wait. Wait for your perfect opportunity, armed with patience and an unwavering plan.